I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, author of the book Why Gold, Why Now? Thank you so much for joining me online today once again. Great to see you.
Thanks for having me, Charlotte.
Of course. And so I know that when we've spoken in the past, a recurring theme in our conversations has always been how people can protect their wealth. And now, as we see inflation rampant in the world, I think that's something that more people are starting to realize. So I want to start the conversation there and talk to you about what mistakes you see people realizing as they try to accomplish this, people who maybe haven't had that as their focus before.
Well, I'm taking a lot of time off right now. I've been out to New Mexico to some hot springs that I've had. I love hot springs. I've had a list of hot springs I want to visit in the United States. There's a ton of them. There's actually a great one in Vancouver, north of Vancouver in BC. But anyway, I've been taking time to do this, and everybody says, "Well, wait a minute, why are you doing that? There's so much going on." Well, that's exactly why I'm taking time off, is because it seems very simple to me. Everything seems very, very, very simple. And then what I see people doing is responding like a deer in the headlights. Panic, freeze, stop, and wait for the car to run over you. That's what people are doing. And so it's very hard for me to be around that and to watch that because what happens is people want to ask me a lot of questions and then they don't want to hear my answer. Although you and I have been talking about the answer for a long time. So what you're seeing right now is everybody is maximum leveraged in the US at least. There was a record number of home equity lines taken out in the spring when people were thinking the Fed's going to raise rates. Just to be clear, the Fed is not really raising rates. I mean, I have the rates right behind me here. The Fed funds rate, which is what they have control over, is only 80 basis points. For people that aren't in finance, that means 0.8%. The inflation rate, you could argue, is 9 or 10%. I was just in the UK running around town trying to explain to people what's going on with Metalla and Nova and catch up because we haven't been able to be there for 2 years. And I was noticing the UK is a really nice place to visit right now because you can see much more clearly than North America what's happening. The world is reversing globalization, okay? And what's happening in the UK is there's not enough workers. The cost of everything is rising like crazy, and there's no return on capital for the average person. And so you're having this really intense pressure cooker there of stagflation. And the reason why I say it's nice to visit is because the UK has gone through some structural changes, like with Brexit and all these things. And my opinion is that they are just the tip of the sword. They're the first. So all the finance guys I meet with there say how dumb it is to have done Brexit. But I said, look, I got to tell you, you were just first. It just feels like you made a mistake because you were first. But the whole world is globalization is over, and you're localizing everything. And the UK is a good place if you want to feel that away from home. You can go and see and feel that right now. So the point is, what do I think that you should do? Well, I think you should consider the fact that the stocks that have gone up for the last 12 years, the high growth technology stocks, interest rates going down, the dollar going up, all these things that have happened for the last 12 years during a quantitative easing, that's the fancy word for increasing the money supply, are not working. And they're going to continue to not work. And if you see a little bit of a rally there, that things kind of perk up, you should use that to reposition. And you should get yourself ready for what's coming in the next few years, which is higher wages, higher inflation, higher costs, lower return on savings. What that means, let me simplify that for the average person. If you have 100 grand sitting in the bank, it's worth about 91,000 after a year, and it's worth about 80,000 after another year. Well, pretty soon it'll be enough for a nice dinner. Okay. So why is that? Well, it's because everything is inflating at a much faster rate than your investments are inflating. In fact, the value of some of your investments is going down. I mean, everybody says to me, and I want to talk about copper in just a second, because that's something I think people need to look at to see exactly what I'm saying, because copper is telling you a lot right now about what's happening in the world. But everybody says, oh, Nova Royalties down. Okay, yeah, guess what? Netflix is down in half. Google, Amazon, Apple, Facebook, Meta, all these companies, down 20, 25%. These are big companies, huge companies. If you go across the board, forget about the NASDAQ, which is down 23%. Take the individual stocks in the NASDAQ. Some of these things are down 50%. Some of them are down more than 50%. A record number of companies in the Russell 2000 don't earn any profit and don't have enough cash to survive. I mean, you've got, the writing is on the wall, and things are slow motion changing right in front of our very eyes. Now, the reason why I think copper is important is because everybody you talk to, I mean, I love going out in public and eavesdropping on conversations. Everybody is super into the green energy transition. They're into net zero, they're into electric vehicles. And for example, in Florida, a lot of power still comes from coal. And obviously that's changing slowly, but people buy a Tesla, they wait 6 or 9 months to get the Tesla, plug it into the wall. It's the coal power plant charges the batteries. It's very funny. And everybody's basically in their mind has already made the energy transition, but in their life is only started. It's only started. I mean, buying a Tesla is only step one. I mean, this is going to be the entire decade. And Charlotte, the thing people didn't understand is the copper price is $4 and call it 25, 30 cents, something like that. 4.25 is a fair price. The copper price has been at an all-time high for a year. It's bounced between right now 4.25 and $5 for a year. It's not done what the gold price has done, you know, where it's had these big gyrations that have confused people. Copper price has been high the whole time. Teck, one of the biggest copper miners on the planet, 90% higher than it was a year ago, the stock. Glencore, 55% higher. I mean, they're being investigated for, you know, there's a lot of news about Glencore recently. It doesn't matter. The price is much higher. So you start looking at all the companies that are mining copper and the price is going up. Well, why is that? Because by 2024, 2025, we'll be in a big deficit for copper. The green energy transition will use more copper than typical industry for the first time ever. And so people say, well, why does that matter? What I'm worried about right now is my pancake coin. I'm worried about that. Can you tell me what's going to happen to well, your pancake coin is doomed. Okay. So we already told you this 2 years ago, but this is doomed. So I'd forget about that. Now, the thing that's not doomed is this energy transition. You're going to be a part of it, like it or not. I mean, as you fast forward down the road, the energy that you use is going to be more and more created instead of drilled for. Okay. And as that happens, you've got to use a lot of copper. And what's happening in the copper market is everybody that's close to the business realizes there's no new copper mines being built. There's just, people are scared to build them. The CEOs of the major companies are up against all kinds of problems. Nobody wants to finance the mine. ESG concerns on the sites, all this diversity of the staff, like they're having to make all these changes, which are all good changes, but they make it extremely difficult to plan for a 50-year copper mine. I mean, you're trying to electrify your truck fleet, change the layout of your staff profile, right? Like you're trying to increase the number of women on site, all these things, which is tricky because you have to put people in school. You have to really change your workforce, which is good. But it's difficult to say, I also need $14 billion to dig a hole the size of Dallas in the middle of nowhere in Chile. At the same time, I'm doing all these things. And the market says, forget about it. We're not doing that. Okay, so where's the copper going to come from? All right, here's the point. Let's simplify this because everybody's saying at this point, well, EB's telling me about too many things. All right, maybe, but I'm going to tell you about something that really can help you. I was with some people the other night, okay, at a cigar lounge, telling them, they're asking me, if you had to simplify how you've made money in your life, how have you made money? Well, I thought about it. There's really only one way that I've ever made money. Like all the ways that I've made a big pile of money have all had one thing in common. And it's always been a situation where I saw something changing and was able to buy what turned into $1 later for a nickel. Okay. So I'll give you an easy example. In Florida, after the real estate crash, I bought houses for about $10 a square foot. Now, I know some people listening, they do meters, whatever, but $10 a square foot is very cheap because Right now, it costs about $175 to build, a pretty average house per foot. Okay. So what that means is I bought the house for about, 6 or 7% of the replacement cost, which to me seemed like ridiculously cheap. Like actually, it seemed like a can't lose situation. And so I saw things changing in the housing market, and I was able to buy these houses. Let's just say I bought it for a nickel and I've sold it for $1, because this year I've been selling these houses. So I've had a lot of real estate closings, no mortgages on these houses. I show up at the closing, they give me a huge check. It's really nice. And I'm trying to explain to everyone, I'm not that smart. When I was buying these houses, they were all boarded up with plywood and everybody had quit on them. And in my mind, I said, if I can buy the house for $10 a square foot and it costs over $100 to build it, I don't see how I could possibly lose. I mean, even if the thing catches on fire and there's nothing left but the lot, I think I could just put a fence around the lot and sell that later and see what happened. Over the next 10 years, the demand got so crazy that you had people borrowing everything they could, getting family to give them money to buy a house, and you're able to sell those houses into a market that's extremely euphoric. So how does that relate to copper? It's very simple. Nova Royalty, where I'm a founder and I'm on the board of directors, I'm going to make this really simple. The way I see Nova Royalty is $1 of copper in the future for a nickel. Nova has about a third of the projects in the world that are in reasonable jurisdictions. That means not in a place where you're taking mortar fire or someone's going to steal the mine from you. Nova has royalties on about a third of the development projects in those places. All I have to do is dial in to the Teck, First Quantum, Southern Copper, Rio Tinto, Glencore analyst calls. Okay, I can see behind me when they're having one, call in, and they're not building the mines. So, well, eventually they're going to have to build the mines because Joe Biden says we're going to have an electric fleet for the government. We're going to use solar. Okay, so somebody's wrong. And my guess is it's not Joe Biden, because he has, like it or not, he has 12 or 13 nuclear powered aircraft carrier battle groups that says, if you don't believe me, try me. Okay, so eventually the mining companies are going to have to build it because there's no possible way you're going to get the copper. Forget about it. It's not, you can't, you can recycle every air conditioner in the whole planet and you can't get enough copper to get done. Robert Friedland recently said there's been 700 million tons of copper mined since the beginning of mankind, and you're going to need that same amount in the next 22 years, which is a crazy thing to think about. So let me just simplify this for you. What am I doing? That's what you originally asked me. Number one, I recommend everyone take a lot of vacation this summer. The number one, you shut the TV off, no more Facebook, go somewhere, be outside, do something you like to do, go see music, do this stuff I've just been going to a couple of fish concerts. If anyone out there likes fish, is touring around the US. I've seen numerous concerts in outdoor venues. It's really nice. It's a great way to enjoy yourself and to not be bogged down in this day-to-day train wreck, okay? And the second thing is, how do you make money? What you do is you find something that you can pay a nickel for that's going to be worth $1 later. That's what you do. And once you buy it, you don't worry about it. You don't walk around staring at your phone on the stock app all day long. You don't even know what you're looking at because you're not in the business. I mean, I really know what I'm doing, and I don't walk around all day looking at it. I find $1 and I pay a nickel for it, and then I go see a fish concert. That's what I do.
Okay, so you've given us a whole bunch of things to think about, and I think that's going to be very helpful for investors. I do know you've been telling us for years, probably at this point, you have to shut off, you have to get away, you have to make your decisions and then trust in them. I know that people really have difficulty about that. And one of the questions that we've been getting a lot over the last year, especially, or 6 months, is why gold and silver prices are not higher given all the things that are going on in the world. I wondered if you could comment a little bit about that and maybe share some advice for people there as well.
Well, when you talk about people not being able to have any patience, I think they need to have some self-reflection, because the way I see it is they're like, remember the story of the tar baby, where every time he's swinging, he's getting more feathers on himself, and because he's got tar, it's sticking, right? So then you swing. Now you look like a bird. You're covered in feathers. The more you swing, the worse it gets. I mean, this is like a drowning person, and they say, I have to keep flailing around because it's all I know how to do. And nobody says, how's it working out for you? I mean, chances are not very well. Okay, so the guy that's telling you to go sit in a hot spring for 2 days is doing a lot better than you, who's walking around staring at your Robinhood app 24/7, wondering, should I switch Pancake Coin for Sushi Coin? And should I do it now or should I do it in 5 seconds? I mean, the average person's ability to see in front, okay, forward, is about 6 feet. So people have really been conditioned for instantaneous thinking. That's all they can do is think for this moment. But most major money is not made in 10-second intervals. It's not. I mean, I'll never forget meeting Peter Rockefeller. It was telling me about this 30-year water project. I mean, I was much younger, and I'm thinking, 30 years, Peter, I've got to be rich soon. I don't have 30 years. I mean, well, you know what? There's something to take away from that. This is how these people think. And this is super rich people. Okay, so you've got to realize that what you've been doing is what got you here. Gold and silver, I always ask people, what are you expecting? Well, I thought the gold price would go up 1,000%, in a couple of weeks. Well, what would possibly make that happen? I mean, you got $12 trillion worth of gold in the world. Most of it is owned by kings, governments, central banks, Indian housewives, people that read my book. I mean, this is not exactly the type of people that are trading gold constantly, hoping that it goes flying up in the air like a crypto coin. And so what are you expecting? Well, okay, why are you betting on gold? Why are you gambling with gold? Because gold is not really you would never gamble with the Mexican peso thinking it was going to go 1,000% higher in a week. It's not going to do that. Well, I borrow a lot of money to do. Well, that's even worse. Okay, what are you doing? Okay, if you read my book, there's two things about gold. One thing about gold is you don't need that much of it. Okay, the reason why you don't need that much of it is because it's a foundational asset. I get these emails all the time. Should we buy gold cryptos? No, I'll tell you why. Not because they're not cool. They're cool. They're smart. They're much better than gold. Okay, because technologically speaking. However, the whole reason you bought the gold is to have foundational wealth. That's the whole reason you bought the gold. So now you're going to take that and you're going to put it on a blockchain and let someone else have it sitting in the cloud somewhere, walking around with it on the smartphone. You got to be crazy. If you want to do that, do it separately from your gold. Do you get what I'm saying? So like if you just have to do that, it's great. It's a great idea. It's technologically speaking, it's cool. But do it separately. You don't need very much gold. You have this gold, you just have it. You just have it. It's a bedrock of your personal financial castle. That's how you have to look at it, right? You're not pulling it out and moving it around all the time. The second piece of that is gold royalties. If gold goes up $100, the value of a portfolio of royalties, Metalla has over 70 royalties now. When I was in London talking to people at Metalla, they said, wait a minute, 70? Last time you were here, you had about 40. Yeah, that's right. We were busy during the pandemic. 70 royalties. Okay, it's a crazy amount. I was just reading the story of Franco-Nevada, and it was dawning on me that our company is a lot like Franco, the way it was formed. I mean, they were very focused on getting these long-term development stage royalties. They thought that's where the action was. Same thing we've done. So you have 70 royalties. Gold price goes up, the value of the royalties goes like this. You get a what they call a leveraged effect. It's like having a lever, like Archimedes. You lift it just a little bit, and on the other end of it, if it's long, it goes really high. Remember, I just said $100. So I mean, everybody says, "Well, I thought gold was going to go up 1,000%." You're crazy. It doesn't need to do that. $100, $200. I mean, that's the move in gold. You go to 2250 or something. 2250. That's reasonable. Maybe later this year. That's a gigantic. That is, you'll have to peel the management of Metalla off the ceiling. That's a huge move in gold because they're looking at 30 years of future gold production with zero exposure to inflation. I'm just going to simplify that down so everyone understands it. Metalla has 5 employees, so they have almost no employees. Metalla has no bulldozers, no dynamite to use at the mine, and they have a very small office and very low expenses. If you took away the cost of being traded on the New York Stock Exchange, it'd be really low. And if the gold price goes up and costs go up, the gold miners don't really make any more money because the oil price is really high. That's about a quarter of their cost. The labor price is really high. That's another big chunk of their cost. The cost of building a mine is pretty much insurmountable at this point. It's very difficult. None of these guys are building huge mines. And whereas the royalty company, what happens? Nothing happens. I mean, maybe your staff gets a raise. That's only 5 of them. How much are you going to give them? I mean, so you have to look at this and say, I have my physical gold, which is, I'm very happy for that to be the bedrock of my empire. That's fine. I'm not looking for that to go up. I'm just looking for that to be a firm foundation. And then I have my royalty stock because as prices move higher, I get that huge lift. And then once you see that, you say, what am I worried about? As far as I'm concerned, I could read the newspaper. I could pick up the Wall Street Journal 3 times a month. And otherwise, I could be sitting in a hot spring. I mean, you don't need to do anything. That's the whole deal. You own these royalties. You don't need to do anything. I mean, honestly, that's the beauty of it. The mining company does all the work.
Okay, so it sounds like you're really taking just a long-term approach to pretty much everything you're doing, which is, I think that's good advice. I wondered if we could talk a little bit about what that long-term looks like, because we're starting to hear so many different words thrown around about the future, recession, even depression. What do you see coming?
Well, the reason why things feel so choppy right now is you're in a gigantic generational shift. And I don't think the shift is very good for the average person. Partly it's their own fault. I mean, they've been lulled into complacency. You're doing this to yourself. I mean, that's the truth of it. It's kind of like someone that makes bad choices for a long time and then says, I just can't believe I've ended up in this situation. And people that are around say, really? You really can't believe it? I mean, we can't believe you didn't see it coming. But you don't see it coming because you've been tricked slowly over many, many years into thinking there'll never be another storm. I can borrow as much money as necessary. For instance, Vancouver. This is the thing about Vancouver that I think is nuts. To buy a condo there as a young person in a cool part of town, you need so much money that the only way you could do it is if your dad was like a Chinese billionaire that just was like, take $7 million and go get yourself a beautiful studio apartment. I mean, there's no possible way that a person coming out of school could get a job, as like a physical therapist or something, and buy a place to live in a cool part of Vancouver. I mean, you go way out in the middle of nowhere, then maybe you could struggle your way into doing something like that. You got to look at this and you got to say, how did this happen? Well, because for 40 years, the cost of borrowing money just went down and down and down and down and down. So all you had to do was borrow money and just keep borrowing money for 40 years and everything just inflated. I mean, that's all these people, these old people, they're like, wow, I lived in this house for 35 years and now it's worth 80 times what I paid for it. So I guess I'll sell it and buy a sailboat or something. I mean, it's crazy. And so everybody looks at this as like, well, what'll happen next? Well, what you see happening is, it looks very, very simple to me because regardless of what I do for work and regardless of my circumstances, my life is quite simple. Okay, I keep it that way for a very specific reason, because if it gets complicated, then it's hard for me to see clearly. If I have too big of a house and too many staff and all these things, it gets really, really hard to see what's going on. So for now, it's easy for me to see. What's happening is that we convinced everybody that there's never going to be another problem, and you borrow as much money as possible to buy a bunch of junk. I mean, the average house in the US is a complete piece of junk, okay? It's made of cardboard and styrofoam, and it's glued together with caulk, and it's embarrassing to look at, and there's no architectural design or feeling behind it. And when you're in there, you're just pelted with UV light, LED lights, blue light, and televisions, and cheap flooring, and smartphone gadgets, and living in there, you eat processed food. It's a miserable life. And then all you do is look at Zillow and say, God, my house went up in value. I'm rich. Okay. And that's all you do. Okay. So basically that's gone on so long that everyone is completely delusional. And what you're seeing now is that the financial conditions are tightening. The cost to borrow is going up just a little bit. The amount of money flowing through the system is coming down just a little bit. People are burning through their savings. People are burning up their savings. If you don't believe me, get on an airplane and look how expensive it is to go somewhere. And then go out to dinner and eat something real, like eat a grass-fed steak or something that actually costs real money. Don't eat something cheap. Don't eat something in a basket. I have a rule, Charlotte. I don't eat at any restaurant that serves food in a plastic basket with a piece of wax paper. I don't do it. It's just a simple rule in life. Okay. Have something real and notice how expensive it is. So this is burning up people's savings. After a little while longer, they're going to say, wait a second, I have no savings left. And yeah, I got a 5% raise, but the cost of everything is up 10%. I'm not sure what I'm going to do. Let me sell some crypto. Can't sell that. It's gone down too much. Let me sell my tech stocks. Can't sell that. It's gone down too much. I got to hold that. I hear this all the time. I'll hold it forever now. Okay, great idea. So as this continues on, you're going to see people, it's like tightening it down until they wince, okay? And you've convinced them to live life at the maximum with no rainy day fund and no thought of tomorrow. Spend money while you can and borrow. You'll be fine. Your house will go up in value. You get another loan. Don't worry about it. And you crank this thing down a little bit and you watch people squeal. That's what's going on right now. And it's actually kind of gruesome. So you don't want to be around. Again, that's why you want to get yourself in order, get your house in order, okay? Stabilize your portfolio. Ask yourself, what do I own? Okay, if you own gold, if you own royalty stocks, if you own Nova Royalties copper portfolio for the energy transition, if you own Metalla with gold royalty stocks, if you have cash, you need a lot of cash, and if you don't have any debt, I'm going to tell you something right now. You're going to be a hard person to get rid of. Believe me. You try to starve someone that has that kind of setup, you can't do it because they can survive anything. And you are in a small minority. Most of these people that are emailing your show that are panicking do not have that type of portfolio. What they have is a stock they heard about at the gym from some musclehead guy that's never done anything with stocks before, and a crypto they read about on an Instagram post, and Amazon, because Amazon delivers a lot of things to their house. I think that's good. And this is about how the thinking goes. And then they say, why isn't it going up? Oh, and then maybe they margin the account to buy more. So then it starts going down and they get a margin call. And what do? You know, they're bamboozled. And they say, well, I thought gold was going to go up a lot. But this is how most people think. It's unbelievable. And so back to my eavesdropping thing, go to a coffee shop, listen to what people talk about. Ask them a question, you know, ask them what they think about net zero or something. Listen to what they talk about. I mean, you hear everything you need to hear, and then what you got to do is you got to get quiet. You can't come home and turn the television on and watch all the programming. They call it programming for a reason, Charlotte. You know that? They call it television. If you're old, they call it television programming. Programming. Think about it. It's what it's doing is programming you. It's programming you to be confused, worried, anxious, lost. Why do you want to be any of those things?
Yeah. Okay. So last thing, just before we wrap up, you've always had a focus on things that are real. You've been talking about that today. We've got gold and silver on the list. Today we added copper and, you know, particular stocks with exposure to those things. Is there anything else that you would add to that list of real assets that you would mention?
Well, I mean, short term, you need to have some cash. As much as maybe cash is doomed over the long term, you got to ask yourself, you know, if I'm walking around with 1% cash, is that enough? You know, if I got 100 grand of assets and I have 1,000 in cash, is that really enough? What happens if the market goes down? What happens if houses sell for $10 a square foot? Can I buy one? Nope, because you have no cash. Oh, I'll just borrow. Guess what? When I was buying those houses, I didn't have very much money, but other people had no money. So just remember that when you get these opportunities, these buying opportunities, if you have no cash, there's nothing you can do about it. And so right now, cash is your ticket to a different reality on the upswing. So I think reassess the scenario with cash and say, I want to have the ability to buy a bunch of things that people will covet later, and I can only do that if I have the dry powder when the storm hits.
Perfect. Well, as usual, you've given us so much to think about. I hope that people find this interview really valuable. Thank you so much for coming on to talk today.
Thanks, Charlotte. Thanks for having me, and we'll talk soon.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is E.B. Tucker, author of Why Gold, Why Now?